The Invesco QQQ is one of the largest ETFs in the market with over $400 billion in its assets under management. You may have seen their commercials on TV, but may not have known that QQQ has actually achieved over 500% more in returns than the S&P 500 since its launch in 1999. Of course, the past doesn't guarantee future results, and this is not financial advice, but in this video, I'm going to break down exactly the difference between QQQ and the alternative QQQM, and by the end of this video, you may be in for a surprise that could save you thousands of dollars depending on the choice you pick. But before we get started, my name is Danny Sully, and all I ask is if you do find value in this video, that you consider hitting the like and subscribe button for future content like this. With that said, let's first go over the key similarities between QQQ and QQQM. To start this off, understand that QQQ tracks the Nasdaq-100, which means if you buy this ETF, you are gaining instant exposure to the performance of the 100 largest non-financial companies listed on the Nasdaq. And when we look at QQQM, this fund also tracks the exact same index, so these two investments give you the exact same type of exposure. You see, when we look at the top 10 companies that make up QQQ, you'll see Nvidia at the top, roughly around 10%, then Apple, Microsoft, and many more thereafter. And when we compare it with QQQM, Nvidia is about the same percentage. Apple, Microsoft, they're all pretty much the same. So because of companies like that are at the top, QQQ has just over 64% of the entire fund in the technology sector, where QQQM is also identical. And so to add on the similarities, because they're both ETFs, they can both be traded throughout the day when the market is open, similar to any ordinary stock. But all in all, both QQQ and QQQM track the exact same index, but let's now go over the key differences that they have. Now, the first most important difference to understand is that QQQ has an expense ratio of 0.2%, which is the cost it takes to own the fund per year. And do know that this cost is automatically taken out of your investment over time. It's not something that you have to pay separately. So if we look at this cost in terms of just 1 year, for every $10,000 that you invest, it would be costing you $20 every year to own the fund. It might not sound like much, but I will say compared to a broad market index fund like an S&P 500 ETF like VOO that has a 0.03% expense ratio, if you were doing this throughout your entire career, that difference can actually have a huge impact. But the reason I mention this is because the alternative QQQM is actually considered the cheaper alternative that is better for long-term investors, because the expense ratio there for QQQM is lower at 0.15%. So because they track the exact same index, the cheaper option is going to be more favorable for long-term investors, because then you will pay less in fees that are taken out of your pocket and impact the total returns you get over time. Now, before you comment, what's the point of making this video? That difference is super small and just buy the one that's more popular. The reason I'm mentioning this is because it does have an impact, and a simple click of a button between QQQ or QQQM, depending on how you invest, may be worth a few minutes of watching. Now, first understand that QQQ has been on the market with data going back to 1999, where QQQM is more recent and was just created in 2020. So there isn't as much data to look back on and compare the differences, but if we look at the average for QQQ, since the fund's inception in 1999, it has averaged an annual return of 10.41%. Now, that average return includes the expense ratio factored into it, but to just keep things simple, let's say that you expect to average 10% per year using QQQ, and you plan to invest $10,000 up front and add $500 every month for 30 years straight. By the end, your investment would be worth over $1 million, but notice the total fees came out to be just over $45,000, where if you were instead to use QQQM that has a 0.15% expense ratio, you would keep over $10,000 more in your pocket from fees, because the total cost would then be under $35,000. To some, this difference might not seem worth doing, but if you plan to invest for the long term and not touch your funds often, adding one more letter when you search the investment before you buy it is really not that hard to do. Now, there are a few things to consider here, because if you already own QQQ and you have to trigger capital gains in order to make the switch, it's probably not worth doing. But if you have losses on the investment and you could benefit from tax loss harvesting, which means you offset those losses with other gains or even from your income, but that's completely a personal choice. Also know that something else to be aware of is that if you are trading on a platform that does not allow fractional shares, QQQ is currently in the $600 per share, where QQQM is in the $200 range. But overall, don't think that just QQQM is the best option. The more popular one is QQQ for a reason, and the choice depends on what you are looking for, because QQQ is known to be better for active traders and those using option strategies. You see, QQQ is currently rated as the second most actively traded ETF in the US based on its average daily volume, where over the past 3 months, it's averaged 52 million shares traded per day, where QQQM is much lower on the list as far as assets under management and has just under 4 million shares traded per day on average over the past 3 months. Because of that, things like the bid-ask spread are going to have an impact, and that pretty much just shows the difference in cost between what a buyer is willing to pay for the fund, which is called the bid price, where compared to the lowest price a seller is willing to accept, that is known as the ask price. Hence the name bid-ask spread. And so this matters because investments like QQQ have more liquidity, so the spread is going to be tighter. And all that means is that if you're trading often, this can save on significant trading costs. And so currently, if we look at QQQ, it has a 0% bid-ask spread, where QQQM is 0.01%. But to sum this up, at the end of the day, QQQ and QQQM both give you the exact same exposure to the Nasdaq-100. The biggest difference is going to come down to how often you invest, whether you are looking at a short-term time horizon of actively trading, or if you are a long-term investor simply looking to buy and hold. If you are a long-term investor, QQQM's slightly lower expense ratio could save you thousands over time, but if you are trading frequently, QQQ's higher liquidity and tighter spreads may be worth the difference. Now, if you want to learn more about the ETF QQQM, consider checking out our recent video that we just created on that topic. And while speaking of, if you want to diversify with other index funds, or at least learn more options, I'll have an entire index fund cheat sheet that I created linked in the description below. Which, while you're at it, if you want to start investing on a new platform, I'll have a direct link below to some of the top options available in the market. End of the day, our mission at InvestLane is to help you save and invest wisely to build lasting wealth. So please do whatever you believe is best for your situation. This is not financial advice, and you must do your own research. And as always, if you found value in this video, don't forget to hit the like, subscribe, and notifications button for future content like this.